Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
Well, it's December, and for lots of businesses, that means looking ahead to the new year, and I think in payments.
Absolutely.
That means watching PayPal.
Yeah.
Um, they recently presented at the UBS Global Technology and AI
Oh,
Conference,
okay.
and we're diving into some of their insights.
Yeah, it's like we get this sneak peek into their game plan for 2025. And what's interesting is their CFO, Jamie Miller, has only been there for a year,
Oh, wow.
and they've already made significant changes.
Complete team overhaul, restructured their internal analysis processes,
Wow.
laser focus on innovation.
Huh.
It's been a busy year.
It sounds like it. So one of the biggest takeaways here is that PayPal is shifting away from just chasing revenue growth to prioritizing profitable growth. And this isn't just a buzzword. This is like a core theme that underpins their entire strategy.
Yeah, this is a pretty big deal because in the past, a lot of payment companies were all about expanding their market share, even if it meant sacrificing profits. And now we're seeing companies like PayPal realize that sustainable growth means finding the right balance between revenue and profitability.
Okay, so how does this actually play out in their different product lines, this new focus on profitable growth?
Well, let's start with branded checkout. So that's, the classic PayPal button you see everywhere online.
Yep.
It's still their core product, and they're seeing strong performance, particularly internationally with enterprise platforms and in online marketplaces.
Okay, so the old reliable still going strong, but they're not just sitting back and letting it coast, are they?
No, not at all. They've been working on this modernized checkout experience, and it's producing some pretty impressive results. Merchants who've implemented it are seeing their conversion rates jump by as much as 4 percentage points. So imagine you had 100 people visiting your online store.
Right.
With this new checkout experience, you might see 4 more of those visitors making a purchase.
That's huge,
Yeah.
especially in e-commerce where every little tweak can make such a difference.
Yeah, exactly. And right now, only about 5% of PayPal's transactions are flowing through this modernized checkout, but they're aiming to scale that to 30% in the coming months.
Wow.
So if they can pull that off, it could be a major driver of profitable growth.
That's fascinating how they're taking something familiar like the PayPal button and just constantly innovating to make it even better.
Yeah.
But what about their other products? How does this profitable growth strategy apply there?
Well, take Braintree, for example. That's their platform for larger merchants, and they're making some strategic shifts there as well. Instead of trying to process as much of a merchant's transaction volume as possible, they're focusing on forging higher margin relationships.
Interesting.
So this might mean processing a smaller percentage of their clients' total payments, but the transactions they do process will be more profitable.
Okay, so it's a bit of a quality over quantity approach.
Exactly. And it's a strategy we're seeing more and more in the payments industry. It's about building sustainable long-term growth, even if it means accepting a short-term dip in volume.
That makes a lot of sense. But if their volume growth is slowing down, how will investors know if this strategy is actually working? What should we be paying attention to?
Keep an eye on their gross profit dollar growth for Braintree. That's the key indicator of whether this shift to higher margin relationships is actually paying off. They're expecting a bit of a reset in late 2025 as they fully implement this new approach. But after that, they're aiming for a more sustainable and, importantly, more profitable growth trajectory.
It sounds like they're really committed to playing the long game here. And I guess that's what you want to see as an investor, a company that's making decisions for the long-term health of the business. But let's move beyond just the digital realm for a moment. PayPal has been making a big push into the physical world too, right?
Absolutely. Remember that campaign they launched with Will Ferrell? PayPal everywhere, pushing their debit card and tap to pay functionality in brick and mortar stores.
I do remember that. I remember thinking that it was pretty clever at the time. But has it actually translated into real-world adoption?
It seems so. Over 1 million users signed up for the PayPal debit card in just the first few weeks of the campaign.
Wow.
And they're seeing what they call a halo effect. People who are using their PayPal debit card to tap to pay in stores are then more likely to use PayPal for their online transactions as well.
So it's not just about gaining a foothold in physical stores. It's about strengthening that connection to their online platform, creating a more seamless experience for users across both channels.
Precisely. It's a smart way to leverage their existing user base and create a more holistic payments ecosystem.
Okay, so we've got the old standby branded checkout still going strong, a strategic shift in Braintree, and a successful foray into the physical world. What else is cooking in PayPal's innovation lab?
Well, they have a newer product called Fastlane that's designed to help merchants boost their conversion rates, particularly for those tricky guest checkouts where people aren't logging into an account.
Yeah, guest checkouts can be a real pain point for shoppers. I know I've abandoned my cart more than once because the process was just too tedious. What's Fastlane doing to smooth things out?
It uses some technology to recognize returning customers, even if they're not logged in, and pre-fill their information so it makes the checkout process incredibly smooth.
Okay,
And it's gaining some traction. They've got over 1,000 merchants using it, including some big names like Adobe Salesforce and BigCommerce.
that's impressive. But here's a question that always pops into my head when I hear about a new shiny product. How are they actually going to make money from it?
That's a great question. Right now, they're still in what they call a price discovery phase for Fastlane, so they're offering it for free while they gather data and figure out the optimal pricing model.
So they're not generating revenue from it just yet, but they're clearly laying the groundwork for future monetization. What kind of pricing models are they exploring? What kind of data are they gathering to inform these decisions?
They haven't revealed specifics about the potential pricing models, yet it could be a flat monthly fee, a percentage of each transaction processed through Fastlane, or some combination of the two. And the data they're gathering is likely focused on things like how much Fastlane is actually boosting conversion rates for different types of businesses, what the average transaction value is for purchases made through Fastlane, and how user behavior changes when Fastlane is implemented.
Okay, so it sounds like they're taking a very data-driven approach, which is encouraging.
hmm
But let's zoom out a bit and talk about the overall financial picture for PayPal in 2025. Based on what we've heard so far, what's the outlook?
Well, Jamie Miller in their presentation highlighted transaction margin dollar growth as a key metric for 2025. This basically reflects PayPal's ability to squeeze more profit out of each transaction. And given their emphasis on profitable growth across all their products, it makes sense that this would be a major focus.
So it's not just about growing revenue, it's about growing revenue in a way that translates into higher profits. It's a more nuanced approach, and honestly, it seems a lot more sustainable in the long run.
I agree. But as with any business, there are always potential headwinds. And in PayPal's case, one thing to keep an eye on is the possibility of tax changes in Singapore, which could impact their overall tax rate in 2025.
Ugh, tax changes are never fun. How significant of an impact are we talking about here?
It's still too early to say for sure. They're working on some mitigation strategies, but it's something investors should definitely be aware of as we head into 2025. It could potentially add a couple of percentage points to their tax rate, which would obviously cut into their profits.
Okay, so there's that wrinkle to keep in mind. But before we wrap up this part of our discussion, I want to make sure we don't forget about Venmo. What's the latest with their peer-to-peer payment platform? Is it still relevant in a world that's increasingly dominated by digital wallets and mobile payments?
Absolutely. Venmo is still a major force in the peer-to-peer payments space with over 60 million monthly active users, and they've been investing heavily in adding new features and finding ways to monetize the platform.
Okay, cool. What kind of new features are they rolling out, and how are they approaching monetization?
They've been adding things like scheduled payments and Venmo groups, which make it easier for people to split bills and manage shared expenses. And they've also been expanding Pay with Venmo, which allows users to make purchases at participating merchants using their Venmo balance.
So they're trying to create a more robust ecosystem around Venmo, moving beyond just person-to-person transfers and making it a more versatile payment tool.
Exactly. It's all about finding ways to make Venmo more integral to people's financial lives. And that's where the monetization opportunities come in.
This is all really interesting, and I'm already starting to get a clear picture of how PayPal is approaching growth and innovation in 2025. But before we dive deeper into some of these topics, let's take a quick break. We'll be back in a moment to continue our exploration of PayPal's strategy.
One thing that really stands out to me about PayPal is their commitment to innovation.
Yeah,
They're not just sitting on their giant pile of cash and calling it a day.
right. They're constantly pushing the boundaries,
Yeah.
experimenting with new products and features, refining their existing offerings. It's impressive for a company of their size. It's like they have the soul of a startup, but the resources of a global powerhouse.
Exactly. And that's what makes them so interesting to follow. They're not afraid to make these bold moves, like this strategic shift away from pure revenue growth towards this more balanced and sustainable approach.
Speaking of bold moves, you mentioned earlier that PayPal's finance organization used to be very focused on overall company metrics, but they've recently shifted to a more product-focused approach. Can you tell us a bit more about that? What prompted that change and what impact has it had?
Well, it seems like they realized that to truly optimize each product and make smart decisions, they needed a more granular view of their business.
Okay.
So they restructured their finance team to focus specifically on individual products and how they're performing in different market segments.
So instead of just looking at the big picture, they're now able to zoom in and analyze each product's performance in detail. That sounds like it would provide a ton of valuable insights.
It absolutely does.
Yeah.
It's like they've put on a new pair of glasses that allows them to see their business with much greater clarity. And this new level of visibility enables them to identify areas for improvement, tailor their pricing strategies more effectively, and make data-driven decisions about where to invest their resources.
That kind of data-driven approach is essential in today's fast-paced world. It's not enough to just have a gut feeling anymore. You need hard data to back up your decisions.
Absolutely. And PayPal has taken this to another level by implementing a structured monthly review process where business leaders across different departments examine data across various market segments, product lines, and geographical regions.
That sounds incredibly thorough. What's the goal of these monthly reviews?
It's all about ensuring everyone is on the same page, working towards the same goals, and using data to inform their decisions. This level of organizational discipline is really impressive, and it shows how serious they are about this transition to profitable growth.
It's like they've created a system where data is the common language, breaking down silos between departments and fostering a more collaborative approach. That's got to be incredibly valuable in such a complex and ever-changing industry.
You hit the nail on the head. And this commitment to data-driven decision-making is evident in everything they do, from prioritizing engineering and marketing spend to how they approach partnerships and negotiations. They're not just throwing money at problems, they're using data to guide their every move.
It's inspiring to see a company as large and successful as PayPal embrace this kind of change. It makes me optimistic about their future.
I agree. They're in a fantastic position to capitalize on the continued growth of the digital economy. Their scale, their brand recognition, and their focus on innovation and profitability set them apart from many of their competitors.
But as we discussed earlier, there are always challenges. Those potential tax changes in Singapore could impact their profitability, and the payments landscape is constantly evolving. New technologies are emerging, consumer preferences are shifting, and competition is always fierce.
That's true. Even with a solid strategy, PayPal will need to remain agile and adaptable to maintain its leadership position. They can't afford to become complacent.
So what's the key takeaway here? For someone like me who's following the payments industry, what should we be watching for as PayPal navigates these challenges and opportunities?
I would say keep a close eye on how they continue to balance growth with profitability. Will they be able to maintain those impressive growth rates while also increasing their profit margins? How will they adapt to new technologies and changing consumer behaviors? And how will they respond to those competitive pressures from both established players and new entrants in the market?
These are all great questions. It seems like the next few years will be a critical period for PayPal as they solidify their strategy and chart a course for the future. But they've proven time and again that they're up to the challenge.
They have. They've demonstrated a remarkable ability to adapt and evolve over the years, and that's why, even with all the uncertainties in the market, they remain a fascinating company to watch.
Okay, so we've talked about PayPal's strategic shift to profitable growth, their impressive innovation pipeline, their commitment to data-driven decision-making, and their ongoing push to create a more holistic payments ecosystem. But there's one more piece of the puzzle. I want to explore their approach to mergers and acquisitions.
Yes. Mergers and acquisitions, they play a crucial role in the growth of any company, especially in a fast-moving industry like payments.
Right.
So how is PayPal approaching this aspect of their strategy?
Well, they've made it clear that they're open to acquisitions, but they're being very selective.
Yeah.
They're not just snapping up companies left and right.
Right.
They're looking for strategic acquisitions that will either enhance their existing product offerings or help them expand into new markets.
That's a smart approach because it's easy to get caught up in the excitement of acquisitions,
Yeah.
but it's essential to maintain discipline and make sure that any acquisition truly aligns with the company's overall strategic goals.
Exactly. They've also hinted that they're more interested in smaller tuck-in acquisitions rather than these blockbuster deals.
Yeah, what's interesting here is that this approach allows them to integrate the acquired companies more seamlessly and avoid some of the potential pitfalls of those large, complex mergers.
It's like they're building a carefully curated collection of companies, each one bringing something unique and valuable to the table. It's a more measured and deliberate approach to growth through acquisition.
And it reflects their overall philosophy of, focusing on sustainable, profitable growth rather than chasing those short-term gains.
So what are some examples of companies that PayPal has acquired recently, and how do these acquisitions fit into their broader strategy?
One example is their acquisition of Happy Returns, which is a company that specializes in reverse logistics for online retailers.
Reverse logistics. You mean like handling product returns?
Exactly. It might seem like a mundane aspect of e-commerce,
Right.
but it's actually a huge pain point for both retailers and shoppers.
Oh, I know. I've definitely been frustrated by complicated return processes in the past. Sometimes it's easier to just keep the item even if it's not quite right.
Right. And that's where Happy Returns comes in. They make the return process super simple and convenient for shoppers, which can lead to increased customer satisfaction and loyalty. And for retailers, it can help reduce costs and streamline their operations.
So by acquiring Happy Returns, PayPal is essentially strengthening its position in the e-commerce ecosystem, making its platform even more attractive to both merchants and shoppers.
Precisely. It's a great example of a tuck-in acquisition that enhances PayPal's existing offerings and adds value for their customers.
Okay.
And it's not just about e-commerce. PayPal's also looking for acquisitions that will help them expand into new and emerging markets.
That makes sense. The world of payments is global, and there's still a lot of untapped potential in many parts of the world.
Yeah.
What are some of the key markets they're targeting?
Well, they've been particularly active in Latin America, where they've made several acquisitions in recent years, including the Brazilian payments company, iZettle.
I remember reading about that acquisition. It was a pretty significant move for PayPal, giving them a major foothold in one of the largest and fastest growing e-commerce markets in the world.
Exactly. And they're not stopping there. They've also made acquisitions in other promising markets like Africa and Southeast Asia.
It sounds like they're taking a very strategic approach to their global expansion, carefully selecting markets where they see significant growth potential.
They are, and they're not just planting their flag in these markets. They're acquiring companies that have deep local expertise and established networks. This allows them to navigate the complexities of each market more effectively and tailor their offerings to meet the specific needs of local consumers and businesses.
So it's not just about being PayPal everywhere. It's about being the right PayPal for every market.
Well said. And this localized approach is essential for success in the global payments landscape. It's a far cry from the one-size-fits-all mentality of the past. They're recognizing that what works in one country or region might not translate well to another. They're embracing the nuances and complexities of each market.
This is all incredibly insightful, and I'm starting to see how PayPal's approach to mergers and acquisitions is just another reflection of their broader strategic focus on sustainable, profitable growth. They're not just chasing shiny objects. They're making calculated moves to strengthen their core business and expand their reach in a thoughtful and deliberate way.
Exactly. And it's an approach that's paying off. They've been able to successfully integrate their acquisitions, leverage their expertise in technology, and further solidify their position as a global leader in the payments industry.
Oh, I don't know about you, but I'm feeling pretty optimistic about PayPal's future after learning all of this. They seem to be firing on all cylinders with a clear vision, a strong leadership team, and a commitment to innovation and execution.
I agree. It's exciting to see a company of their stature embracing change, adapting to new realities, and pushing the boundaries of what's possible in the world of payments. They're a company that's worth watching, and I'm eager to see what they accomplish in the years to come.
Me too. And I'm sure our listeners are feeling equally informed and intrigued. But before we wrap up this episode, I want to take a moment to address something that's been on my mind throughout our discussion, the role of regulation in the payments industry.
Ah, yes. Regulation is a critical aspect of any financial services industry, and payments are no exception.
Right.
So how is PayPal navigating the increasingly complex regulatory landscape?
So as we wrap up our look at PayPal, what does all this mean for you, the listener, who's interested in the world of payments?
Well, I think, if you're following this industry, it seems like PayPal is taking a really strategic and disciplined approach to growth. They're not just chasing big numbers, they're focused on building a sustainable and profitable business for the long haul.
It's like they're playing a game of chess, thinking several moves ahead and anticipating the challenges and opportunities that lie ahead.
Yeah, that's a great analogy. They're not just reacting to market trends. They're actively shaping the future of payments with their investments in innovation, their global expansion, and their thoughtful approach to regulation.
It's also impressive how they're leveraging their massive user base to create a more holistic payments ecosystem, connecting the online and offline worlds and bridging the gap between traditional finance and the emerging world of digital currencies.
Yeah, they're really building a platform that can cater to the diverse needs of consumers and businesses around the world.
And it'll be fascinating to see how these initiatives play out in 2025 and beyond. What new products and features will they roll out? Will they make any major acquisitions? How will they navigate the evolving regulatory landscape?
Yeah, so many interesting questions to ponder. One thing to consider is how their strategy might adapt to the rapidly changing landscape of digital currencies.
That's a great point. Will they integrate crypto payments more deeply into their platform? Will they launch their own stablecoin? These are all possibilities that could have a significant impact on the payments industry.
Absolutely. And it's a reminder that the world of payments is never boring. There's always something new and exciting happening.
It's a dynamic and constantly evolving industry, and that's what makes it so fascinating to follow.
Exactly. And that's why we love doing this with you each order. It's all about staying curious and informed about the forces that are shaping the future of commerce and finance.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.